keuangan syariah melalui perubahan fungsi KNKS menjadi KNEKS agar pengembangan sektor keuangan syariah juga dapat dilakukan beriringan dengan pengembangan ekonominya. Koordinasi di antara kementerian dan lembaga terus ditingkatkan agar kebijakan yang ditempuh bisa memberikan dampak positif yang sesuai dengan kondisi di lapangan. Dunia pesantren dan berbagai penggiat usaha syariah berikhtiar dengan inovasi melalui penerapan usaha berbasis protokol COVID-19, mendorong produk ketahanan pangan, dan mengembangkan renewable energy. Pemasaran berbasis teknologi digital dilakukan agar penyediaan produk halal dapat dipasarkan secara luas dengan harga terjangkau. Ekosistem keuangan syariah dikembangkan melalui berbagai penerbitan produk keuangan syariah seperti cash wakaf link sukuk, bank wakaf mikro, dan realisasi kur. Pada keuangan sosial syariah masyarakat secara berbondong-bondong menyalurkan zakat, infak, sedekah, dan wakaf atau ziswaf untuk membantu masyarakat yang kekurangan. Seluruh hal ini dilakukan agar manfaat pengembangan ekonomi dan keuangan syariah dapat dirasakan oleh seluruh komponen ekonomi bangsa. Ikhtiar demi ikhtiar terus digelorakan oleh seluruh elemen bangsa. Kebijakan yang adaptif, inovasi pada sektor usaha dan keuangan syariah memberikan kita semangat untuk terus bekerja sama dalam kebaikan dalam rangka mengoptimalisasi dampak positif kerjasama yang telah dibangun oleh seluruh pemangku kepentingan. Bank Indonesia bersama dengan KNEKS menciptakan sebuah platform terintegrasi yaitu Indonesia Syariah Economic Festival atau ISEF dan Festival Ekonomi Syariah atau FESYAR yang dapat mengakomodir terbentuknya silaturahim yang erat di antara regulator, profesional, pelaku usaha syariah, unit usaha pesantren, korporasi domestik dan internasional, komunitas masyarakat dan akademik. Diharapkan dengan salah satu pusat ekonomi dan keuangan syariah dunia dapat terwujud. Saat ini, ISEF telah memasuki penyelenggaraannya yang ketujuh yang telah berhasil meraih pencapaian positif pada bidang ekonomi dan keuangan syariah Indonesia. Terhubungnya pelaku usaha syariah dengan investor dan peningkatan literasi masyarakat. Mulai tahun 2017, ISEF selalu diawali dengan kegiatan FESYAR di 3 daerah, Sumatera, Jawa, dan Timur Indonesia. Pelaksanaan ISEF dan FESYAR kali ini dilakukan dengan konsep yang berbeda dari tahun-tahun sebelumnya, yaitu menggunakan format virtual. Rangkaian ISEF 2020 akan mulai dilaksanakan pada bulan Agustus dan puncaknya pada bulan Oktober 2020. Mari melangkah bersama ISEF 2020 menjadikan Indonesia sebagai pusat ekonomi dan keuangan syariah dunia. rangka mendorong pengembangan ekonomi syariah, Bank Indonesia bersama kementerian dan otoritas yang tergabung dalam Komite Nasional Ekonomi dan Keuangan Syariah serta berbagai stakeholders ekonomi dan keuangan syariah kembali menyelenggarakan ISEF ke-7. Pandemi COVID-19 memberikan dampak yang sangat luas, tidak hanya krisis kesehatan, namun menyentuh berbagai sisi sektor kehidupan, termasuk sektor ekonomi yang terdampak luas. Untuk meminimalisir hal tersebut, berbagai usaha dan kolaborasi telah dilakukan oleh pemerintah dan berbagai lembaga negara. Hal tersebut dilakukan melalui penyesuaian anggaran belanja di berbagai sektor dan penerbitan kebijakan bauran lainnya untuk memperkuat stimulus ekonomi. Penguatan kelembagaan juga dilakukan oleh pemerintah untuk mendorong ekonomi dan keuangan syariah melalui perubahan fungsi KNKS menjadi KNEKS agar pengembangan sektor keuangan syariah juga dapat dilakukan beriringan dengan pengembangan ekonominya. Koordinasi di antara kementerian dan lembaga terus ditingkatkan agar kebijakan yang ditempuh bisa memberikan dampak positif yang sesuai dengan kondisi di lapangan. Dunia pesantren dan berbagai usaha syariah berikhtiar dengan inovasi melalui penerapan usaha berbasis protokol COVID-19, mendorong produk ketahanan pangan dan mengembangkan renewable energy. Pemasaran berbasis teknologi digital dilakukan agar penyediaan produk halal dapat dipasarkan secara luas dengan harga terjangkau. Ekosistem keuangan syariah dikembangkan melalui berbagai penerbitan produk keuangan syariah, wakaf link sukuk, bank wakaf mikro, dan realisasi kur. Pada keuangan sosial syariah masyarakat secara berbondong-bondong menyalurkan zakat, infak, sedekah, dan wakaf atau ziswaf untuk membantu masyarakat yang kekurangan. Seluruh hal ini dilakukan agar manfaat pengembangan ekonomi dan keuangan syariah dapat dirasakan oleh seluruh komponen ekonomi bangsa. Ikhtiar demi ikhtiar terus digelorakan oleh seluruh elemen bangsa. Kebijakan yang adaptif, inovasi pada sektor usaha dan keuangan syariah memberikan kita semangat untuk terus bekerja sama dalam kebaikan dalam rangka mengoptimalisasi dampak positif kerjasama yang telah dibangun oleh seluruh pemangku kepentingan. Bank Indonesia bersama dengan KNEKS menciptakan sebuah platform terintegrasi, yaitu Indonesia Syariah Economic Festival atau ISEF dan Festival Ekonomi Syariah atau FESYAR yang dapat mengakomodir terbentuknya silaturahim yang erat di antara regulator, profesional, pelaku usaha syariah, unit usaha pesantren, korporasi domestik dan internasional, komunitas masyarakat, dan akademisi. Diharapkan dengan bertemunya seluruh komponen tersebut, tujuan menjadikan Indonesia sebagai salah satu pusat ekonomi dan keuangan syariah dunia dapat terwujud. Saat ini, ISEF telah memasuki penyelenggaraannya yang ke-7 yang telah berhasil meraih pencapaian positif pada bidang ekonomi dan keuangan syariah Indonesia, terhubungnya pelaku usaha syariah dengan investor, dan peningkatan literasi masyarakat. Mulai tahun 2017, ISEF selalu diawali dengan kegiatan FESYAR di 3 daerah, Sumatera, Jawa, dan Timur Indonesia. Pelaksanaan ISEF dan FESYAR kali ini dilakukan dengan konsep yang berbeda dari tahun-tahun sebelumnya, yaitu menggunakan format virtual. Rangkaian ISEF 2020 akan mulai dilaksanakan pada bulan Agustus dan puncaknya pada bulan Oktober 2020. Mari melangkah bersama ISEF 2020 menjadikan Indonesia sebagai pusat ekonomi dan keuangan syariah dunia. rangka mendorong pengembangan ekonomi syariah, Bank Indonesia bersama kementerian dan otoritas yang tergabung dalam Komite Nasional Ekonomi dan Keuangan Syariah serta berbagai stakeholders ekonomi dan keuangan syariah kembali menyelenggarakan ISEF ke-7. Pandemi COVID-19 memberikan dampak yang sangat luas, tidak hanya krisis kesehatan, namun menyentuh berbagai sisi sektor kehidupan, termasuk sektor ekonomi yang terdampak luas. Untuk meminimalisir hal tersebut, berbagai usaha dan kolaborasi telah dilakukan oleh pemerintah dan berbagai lembaga negara. Hal tersebut dilakukan melalui penyesuaian anggaran belanja di berbagai sektor dan penerbitan kebijakan bauran lainnya untuk memperkuat stimulus ekonomi. Penguatan kelembagaan juga dilakukan oleh pemerintah untuk mendorong ekonomi dan keuangan syariah melalui perubahan fungsi KNKS menjadi KNEKS agar pengembangan sektor keuangan syariah juga dapat dilakukan beriringan dengan pengembangan ekonominya. Koordinasi di antara kementerian dan lembaga terus ditingkatkan agar kebijakan yang ditempuh bisa memberikan dampak positif yang sesuai dengan kondisi di lapangan. Dunia pesantren dan berbagai penggiat usaha syariah berikhtiar dengan inovasi melalui penerapan usaha berbasis protokol COVID-19, mendorong produk ketahanan pangan dan mengembangkan renewable energy. Pemasaran berbasis teknologi digital dilakukan agar penyediaan produk halal dapat dipasarkan secara luas dengan harga terjangkau. Ekosistem keuangan syariah dikembangkan melalui berbagai penerbitan produk keuangan syariah seperti cash wakaf link sukuk, bank wakaf mikro, dan realisasi kur. Pada keuangan sosial syariah masyarakat secara berbondong-bondong menyalurkan zakat, infak, sedekah, dan wakaf atau ziswaf untuk membantu masyarakat yang kekurangan. Seluruh hal ini dilakukan agar manfaat pengembangan ekonomi dan keuangan syariah dapat dirasakan oleh seluruh komponen ekonomi bangsa. Ikhtiar demi ikhtiar terus digelorakan oleh seluruh elemen bangsa. Kebijakan yang adaptif, inovasi pada sektor usaha dan keuangan syariah memberikan kita semangat untuk terus bekerja sama dalam kebaikan, dalam rangka mengoptimalisasi dampak positif kerjasama yang telah dibangun oleh seluruh pemangku kepentingan. Bank Indonesia bersama dengan KNEKS menciptakan sebuah platform terintegrasi, yaitu Indonesia Syariah Economic Festival atau ISEF dan Festival Ekonomi Syariah atau FESYAR yang dapat mengakomodir terbentuknya silaturahim yang erat di antara regulator, profesional, pelaku usaha syariah, unit usaha pesantren, korporasi domestik dan internasional, komunitas masyarakat, dan akademisi. Diharapkan dengan bertemunya seluruh komponen tersebut, tujuan menjadikan Indonesia sebagai salah satu pusat ekonomi dan keuangan syariah dunia dapat terwujud. Saat ini, ISEF telah memasuki penyelenggaraannya yang ke-7 yang telah berhasil meraih pencapaian positif pada bidang ekonomi dan keuangan syariah Indonesia, terhubungnya pelaku usaha syariah dengan investor, dan peningkatan literasi masyarakat. Mulai tahun 2017, ISEF selalu diawali dengan kegiatan FESYAR di 3 daerah, Sumatera, Jawa, dan Timur Indonesia. Pelaksanaan ISEF dan FESYAR kali ini dilakukan dengan konsep yang berbeda dari tahun-tahun sebelumnya, yaitu menggunakan format virtual. Rangkaian ISEF 2020 akan mulai dilaksanakan pada bulan Agustus dan puncaknya pada bulan Oktober 2020. Mari melangkah bersama ISEF 2020 menjadikan Indonesia sebagai pusat ekonomi dan keuangan syariah dunia.
Tes.
Tes.
Bisa didengar, Pak? Suara saya bisa didengar, Pak? Waalaikumsalam.
Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh. Dr. Jamshaid, Assalamualaikum.
Waalaikumsalam. Professor, how are you?
Alhamdulillah. How are you doing?
Fine, Alhamdulillah. How's everything?
Alhamdulillah Rabbil Alamin.
It's good time to say hello to everyone. Before Syed, Faiq, how are you, Faiq?
Alaikum salam rahmatullah. I'm very well, alhamdulillah. How are you all doing?
Alhamdulillah, Alhamdulillah. Brother
How are you?
Omar, how are you?
Brother Omar.
Assalamualaikum. Assalamualaikum
Assalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum. Brother
Waalaikumsalam.
Waalaikumsalam.
Sultan, how are you?
Alhamdulillah, I'm fine. Thank you, brother. I think it is the time for us to start. If you don't mind, can we start? Pak Ventje, can we start?
Please, Pak Amir. Thank you.
Bismillahirrahmanirrahim. His Excellency Dr. Halim Alamsyah, Chief of Commissioner Board of Indonesia Deposit Insurance Corporation, LPS, Vice Chairman 2, Indonesian Association of Islamic Economists, IAEI, and a member of National Committee for Islamic Economy and Finance, KNEKS. The Honorable Mr. Ventje Rahardjo, the Executive Director of National Committee for Islamic Economy and Finance, the Republic of Indonesia, KNEKS, distinguished speakers and participants, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
All praises belong to the Almighty Allah Subhanahu wa Ta'ala, the one who always showers us His mercy and blessings, so we can gather virtually in this international webinar. Peace be upon the Prophet Muhammad Sallallahu Alaihi Wasallam, the greatest role model of all time for humankind. My name is Sultan Emir Hidayat. I am currently the Director of Islamic Economy Supporting Ecosystem at KNEKS, and I'm very excited and glad to be your host today. This is our first international webinar, which is a part of the series of international webinar Road to Indonesia Sharia Economic Festival, ISEF. And the theme of today's webinar is Islamic Finance, Regulatory Developments, Impediments and Opportunities in COVID-19, which is presented to you by the first one, National Committee for Islamic Economy and Finance, Komite Nasional Ekonomi dan Keuangan Syariah, KNEKS, the Republic of Indonesia, Indonesia Deposit Insurance Corporation, Lembaga Penjamin Simpanan, LPS, the Indonesian Association of Islamic Economists, Ikatan Ahli Ekonomi Islam Indonesia, IAEI, and Alhamdulillah, we are very fortunate today to have 4 prominent speakers with us. Dr. Jamshaid Anwar Chattha, former Assistant Secretary General, Islamic Financial Services Board. Assalamualaikum, Dr. Jamshaid.
Waalaikumsalam.
Mr. Syed Faiq Najeeb, Senior Islamic Finance Specialist, Islamic Development Bank. Assalamualaikum, Mr. Syed.
Waalaikumsalam warahmatullah, Dr. Sultan.
Mr. Omar Mustafa Ansari, Secretary General, Accounting and Auditing Organization for Islamic Financial Institution. Assalamualaikum, Mr. Umar.
Waalaikumsalam, brother.
And Dr. Ronald Rulindo, the Chairperson, Islamic Deposit Insurance Technical Committee, Indonesia Deposit Insurance Corporation, LPS. Assalamualaikum, Dr. Ronald.
Waalaikumsalam warahmatullahi.
So, in order to get Allah's blessing, let us open this event by reciting Basmalah. Bismillahirrahmanirrahim. Ladies and gentlemen, this seminar will take about 2 hours. It consists of 50 minutes panel discussion with 4 prominent panelists, probably 10 maximum to 15 minutes each. and 25 minutes interactive questions and answer session. If you want to ask question, please write your question on the chat room. And I also would like to remind all the participants to please turn off or mute your speakers throughout the webinar to ensure the smooth conduct of the program. Before we start our main agenda, which is the panel discussion, we will have opening remarks and keynote speech from our respective leaders of Islamic economy and finance in the Republic. First, I would like to invite Mr. Ventje Rahardjo, the Executive Director of KNEKS, to deliver his opening remarks. Mr. Rahardjo, the floor is yours.
Thank you, Pak Emir. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. The Honorable Bapak Halim Alamsyah, distinguished speakers and participants, ladies and gentlemen, all praises to God Almighty, Allah Subhanahu wa Ta'ala, the one who always shower us with His mercy and blessing, so we can gather in this special occasion virtually. Peace be upon the Prophet Muhammad SAW, the greatest role model of all time for humankind. Alhamdulillah, today's international webinar is held as part of the Road to Indonesia Sharia Economic Festival, or ISEF 2020, from August 7th until October 21st, 2020. Ladies and gentlemen, in recent years, the Islamic economy already occupies its own extraordinary niche in the global economic system. The Indonesian government responded to this growing opportunity by forming the National Committee for Islamic Finance, or KNKS, in 2017. Meanwhile, in 2019, Indonesian Islamic Economy Master Plan, or MEKSI, was launched by the President of the Republic of Indonesia with the direction that Indonesia must become one of the global hub for the Islamic economy. In early 2020, KNKS has already been prepared, changed into the Islamic Economy Implementation Plan for 2020-2024, with the objective to achieve the vision of Indonesia's Islamic economy to become one of the world leading halal hub in 2024. Therefore, the government considers it is important to strengthen the role of KNKS through the issuance of another president regulation concerning the National Committee for Islamic Economy and Finance, or KNEKS. Through these regulations, the role of KNEKS is expanded, not only to handle the Islamic financial sector, but also to handle the development of the whole Islamic economic sector. According to the data from the World Health Organization, ladies and gentlemen, there are almost 20 million total cases of novel coronavirus in the world as of August 10, 2020. We are facing the inconvenient truth that this outbreak affects all aspects of our life. Thus, we cannot deny that financial sector is one of the most affected sectors, and Islamic financial industry is no exception. Moreover, the COVID-19 pandemic has also put most of the emerging countries' economic conditions in crisis. The Economist Intelligence Unit, or EIU, predicted that the global growth will only be 1.9% in 2020 or worse, the lowest since the global financial crisis. As the economic growth turning down, the performance of Islamic financial industry will also be likely challenged and shrinking. According to the REM ratings, the financial growth of the Islamic banks is forecasted to decrease until below 5% in 2020. This drop consequently will reduce revenue sharing or margins of the banks, which will also reduce their profits. Ladies and gentlemen, Alhamdulillah, in this blessed month of Zulhijjah, National Committee for Islamic Economy and Finance, the Republic of Indonesia, KNEKS, collaborated with the Indonesia Deposit Insurance Corporation, or LPS, and Indonesia Association of Islamic Economists, IAEI, have an opportunity to hold this international webinar titled Islamic Finance, Regulatory Developments, Impediments and Opportunities in COVID-19. We would like to thank all the prominent speakers and all parties who have helped us in organizing this webinar. We believe that by sharing experiences from different regulatory bodies in various countries are very much invaluable, particularly in addressing the Islamic finance regulatory aspects, as well as the opportunities and hindrances in the respective regulatory institution in Muslim countries. Ladies and gentlemen, therefore, I would like to encourage and welcome all speakers to share their views and knowledge, particularly related to Islamic finance regulatory framework. We hope that this webinar can provide diverse perspectives from each regulatory institutions in different countries about the international standards, as well as supervisory and regulatory issues in Islamic finance during this COVID-19 pandemic. We believe that the outcome of this webinar could inspire more regulatory bodies in many countries in sailing through the uncertain time during this pandemic. Finally, I do hope all of you will have productive dialogue and fruitful discussion during this webinar. Thank you for your kind attention. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you for your excellent and insightful remarks, Mr. Rahardjo. We learned from your presentation about the Indonesian government's commitment towards the development of Islamic economy and finance in the country, especially through the National Committee, KNEKS. Second, let us move to the keynote speech that will be delivered by His Excellency Dr. Halim Alamsyah, Chief of Commissioner Board, Indonesia Deposit Insurance Corporation, LPS, Vice Chairman 2 of IAEI, and a member or commissioner of KNEKS. Please welcome Dr. Halim Alamsyah. Dr. Halim, you need to unmute.
Okay, sorry. Thank you, Pak Emir. The Honorable Pak Ventje Rahardjo, Executive Director of KNKS, distinguished speakers, ladies and gentlemen, and my beloved participants. First of all, I would like to thanks for having me to deliver this keynote. May the peace, mercy, and blessing of Allah be upon us. In this wonderful occasion and very important and also interesting topics, allow me to deliver a keynote about Islamic finance regulatory developments, especially with regard to Indonesian case. I will divide my speech into 4 parts. First of all, the global economy as we have seen it now, the impacts of COVID-19 on financial institutions as a whole, and the implication of COVID-19 on Islamic banking. And then the implementation of Sharia principles in deposit insurance and bank resolutions, something that we are now still developing it. And the last one is the comprehensive policy action that has been taken by the Indonesian government and the financial regulators. Let me go directly to slide number 3, please. As we all know, I'm sorry, maybe it's not really very fast. Maybe I have to wait. Ladies and gentlemen, as we all know, the COVID-19 pandemic has spread around the world, and it had a significant impact on the economy, including in Indonesia, of course. With a lot of uncertainties, many parties, including international institutions, such as IMF, have forecasted that the global growth will get contracted at around -5% this year, before expanding again next year and beyond. We hope that forecastings are correct, but we all know the cloud of uncertainties are really high. And could someone just go directly to slide number 4, please? If not, then I'm taking this opportunity to continue, Pak Emir. Along with these contractions of the economic activities, the financial sector is definitely will be most affected by this COVID-19. The risks are rising, especially from economic sectors such as micro, small and medium enterprises that are less able to meet loan obligations. And at the same time, financial institutions may also experience decrease in their value of assets due to lower yields on financial and stock instruments. We may also notice the increasingly tensions in maintaining the financial stability in the financial system, as there are high interconnectedness between financial institutions and banks, as well as to the corporations. Thus, the well-functioning of the financial sector is very critical in this case, and therefore efforts need to be taken fast, decisive, and effective to maintain the financial stability. To the next slide, please. Looking from the perspective of risk management, if you may be able to go to the next slide. Looking from the perspective of risk management, the COVID-19 and its economic consequences undoubtedly has increased risk in banking industry, at least for credit risk, for market risk, and the liquidity risk. These are risks that are being identified by the financial regulators, of course, and we have already taken several policy initiatives to handle these risks in order to make sure that the banking sector can really still operate in still prudent way, and at the same time making sure there are some opportunities for them to develop or to expand their balance sheet. Islamic Bank themselves also should also mitigate the increase, especially in the credit risk, to various ways, including determining the most suitable type of financing, performing robust stress testing, and continuously monitoring financing portfolios. It is in this juncture, policy responses of authorities under financial safety net framework should strengthen the coordination to provide more safety nets, especially in the liquidity provisions, relaxing some of the regulations for the banks, including the Islamic banks, and also, at the same time, try to maintain the depositors' trust. And this is one of our in Indonesian Deposit Insurance Corporation's job. This is our main job in Policy 4, if you look at the slide. So as a whole, in Indonesian case, the banking sector policy will be taken by the Financial Services Authority, OJK. On the liquidity side, will be taken by the central bank. On the on the fiscal side will be taken by Minister of Finance, and on the depositor side will be taken by Indonesian Deposit Insurance Corporations. So by doing this kind of 3 or maybe 4-pronged approach, we are making sure that the economy can grow at the same time. The banking sector can do their function. A well-functioning banking sector especially is really, of course, very critical for Indonesia, because Indonesian economy and financial systems are dominated by the banking industry. And we also know that one of the particular risks that is arising during this COVID pandemic is the credit risk. And that's why the Ministry of Finance, together with Financial Services Authority, or OJK, has issued regulations that are providing the opportunity for not only the banks, but also the debtors to restructure their loans. And this is especially for medium and small scale enterprises, as well as corporations, in order to promote the national economic recovery, and also to maintain the credit risk faced by banking sector. On the next slide, on the liquidity risk, as we know that liquidity is really a type of risk that may trigger bank failures. And this is the reason why, at normal condition, banks are required to hold high quality liquid assets and maintain stable funding to mitigate potential liquidity shocks. However, during this pandemic, banks may face difficulty if some depositors lose their confidence on the banking sector and withdraw their fund and trigger the bank runs. And this is, at this point, lender of last resort plays very crucial role to assist banks that face liquidity problem, and the program of the guarantee program given by the LPS, or Indonesian Deposit Insurance Corporations, are such a very critical policy to maintain the confidence of the public. So Bank Indonesia and OJK and also LPS has strengthened our coordination to provide several measures to ease the pressures on liquidity, including for Islamic banks in Indonesia, and to maintain the public confidence on their deposits in the banking sector. And these policy responses have eased the tension relatively well. On the market risk, on the next slide, related to the market risk, perhaps Islamic banks are less affected by market risk than conventional banks because of its limited exposure to sophisticated instruments that commonly become sources of market risk. And we also know that there's many methods to deal with this market risk. However, in Indonesia, based on our experience, it showed that Islamic banks in Indonesia may still have difficulties in mitigating market risk, as there is a lack of Sharia-compliant hedging instruments and methods available. Currently, the regulators, especially the OJK, or Indonesian Financial Supervisory Authority, is still trying to fill this gap as soon as possible. The next risk faced by Islamic banking is, of course, on the rate of return risk. And we all know that this is one of the specific risks belong to the Islamic bank. Unlike conventional banks, the rate of return for Islamic bank is not fixed, and it is only known at the end of the investment period. Rate of return risk arises because Islamic banks provide additional profit sharing to investors when equivalent rate of profit sharing received by Islamic banks investors is lower than conventional bank interest rate. We have seen that in Indonesian context as well. Managing rate of return risk is quite challenging. Implementing balance sheet techniques during pandemic conditions is, of course, clearly quite difficult, as Islamic bank has lack of flexibility to place their investment in high-quality investments. On the other hand, Islamic banks in Indonesia may not be ready to implement it, the PER and IRR. So these are really a very challenging time for Islamic banking, especially in Indonesian context. Ladies and gentlemen, let me now address you what role we in LPS has done during this current COVID pandemic in the next slide. Deposit insurers and Bank Resolution Authority during the current situation, the abnormal situation, is playing a quite important role, especially to prevent and also to manage bank failures, including Islamic banks. And of course, we are hoping that are not going to happen, and we are trying to do our best to prevent a banking crisis, of course. In current situation, as you know, the Central Bank or Bank Indonesia is the lender of last resort to prevent the liquidity problems, including problems in Islamic bank liquidity, from failures. If this facility is not enough, then of course another net or another policy responses need to be provided. And in this case, deposit insurers and Bank Resolution Authority, or in LPS, play an important role to prevent such bank failure, and especially to prevent that failures to turn into banking crisis. Currently, the government of Indonesia has issued an emergency law, what we call it the Perpu, covering not only expanding the authorities of LPS, but also expanding the authorities of the Central Bank. Currently, the Bank Indonesia or the Central Bank can buy directly the government bonds in the primary market, something that is really prohibited during normal situation. At the same time, the LPS or Indonesian Deposit Insurance Corporations are given more authorities to do what we call it early involvement in examining the banks. Should, according to the indicators provided by the Indonesian Financial Authority, the regulators of several banks are being, for example, deteriorating. LPS can go directly to the banks to do the examination, and at the end, we can also have the authority to provide the liquidity needed for the banks in order to alleviate or to ease the tension of the liquidity of the banks. And that authorities include also how to handle the Islamic banks. Unfortunately, I have to acknowledge that currently Indonesia is still developing what kind of deposit insurance program and resolution, the appropriate resolution for Islamic banks in line with the Sharia rules and principles. Fortunately, the Majelis Ulama Indonesia has issued fatwa, and also we have issued our IDIC regulation number 1 of 2020 concerning the implementation of deposit insurance and bank resolution based on Sharia principles. Ladies and gentlemen, of course, bank resolutions are really one of the most challenging for LPS during this current pandemic situation. And according to what we have done, there are some key factors to have an effective and efficient Islamic bank resolution. First of all, the availability of policies regarding bank resolutions that can accommodate specific characteristics of Islamic banks. Secondly, the availability of Islamic banks as assuming banks or buying investors to support the option of purchase and assumption. And the third, how really to improve the deposit insurance business processes internally, especially adjusting supporting infrastructures, separating the pooling of deposit insurance funds, and investing in Islamic investment instrument, etc. And the last one, of course, how really to have a good, capable, and capacity of human resources within the LPS. Ladies and gentlemen, in facing COVID-19, as I told you earlier, various policy responses has been carried out. Among others are the social safety net, the real sector safety net, and the financial sector safety net. The provision of economic stimulus has been aimed to minimize the spillover effect of the COVID-19, limiting the impact on the financial sector, and controlling the pandemic COVID-19 itself. These three prongs are very much becoming a standard in many countries. And I think without having alleviating first the impact of pandemic COVID-19 itself, it will be difficult for us to promote, to recover the economy as soon as possible. So in conclusion, ladies and gentlemen, the COVID-19 pandemic gave a severe impact on our economy. The global economy, of course, will contract this year, but we do hope next year the situation will be becoming better. Financial sector as one of the most affected sectors because the market volatility is increasing and the confidence of the depositors will be affected, and the borrowers are also less able to meet their obligations. So the tensions in the financial sector is quite high, including the tension on Islamic banks. And we do hope that many policy responses that has been taken by the authorities and the government may ease and also preserve the financial system stability. And we do hope our economy will be expanding very soon. And ladies and gentlemen, I do hope that, by having this webinar and quite interesting topic to be discussed, I earnestly hope that your discussion will benefit us all and contribute to the future development of Islamic finance, not only in Indonesia, but also in the world. Without further ado, I would like to congratulate all. Thank you very much for your attention. Billahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Waalaikumsalam warahmatullahi
wabarakatuh.
Thank you, Your Excellency, for your interesting and remarkable keynote speech. On behalf of the organizers, I would like to apologize for the inconvenience caused, especially the slides issue. Some important notes from your presentation are the COVID-19 pandemic gave a severe impact on economic activity. The global economy is projected to contract sharply as the cases grow exponentially. Financial sector has been one of the affected sectors as the market volatility increase. The borrowers are less able to meet their obligations with banks, and the pressure of costs is higher. Regulators shall adjust their regulations and provide incentive to maintain growth of Islamic financial services sectors during COVID-19 pandemic. However, preserving financial system stability must always be the main objective. Thank you very much, Your Excellency. Now we move to our main agenda, the panel discussion on Islamic finance, regulatory developments, impediments, and opportunities in COVID-19. Distinguished speakers and participants, please allow me to give you an overview about our webinar today. As we know, the global impact of the coronavirus pandemic has been catastrophic. Not only it has affected the healthcare system, but also hit the brakes on many public activities, such as schools, restaurants, offices, and other businesses. The International Monetary Fund, IMF, in its June 2020 World Economic Outlook, projected global economic growth to be at negative 4.9% in 2020, which is 1.9 percentage points below the April 2020 projection. It is important to note that the recession caused by this pandemic might be far worse than the global financial crisis in 2007-2008. As it has been discussed by many scholars, the current crisis is different from other crises in the past, since it affects the real sector heavily from the beginning. Compared to conventional banking, Islamic banking has a larger exposure to micro, small, and medium enterprises, MSME, microfinance, and retail lending. Obviously, Islamic banks need to adapt to the rapidly evolving market while maintaining its unique advantageous values. It is believed that Islamic finance has distinct features and products that could minimize the effect of the crisis. Unfortunately, the regulatory framework has not been supportive enough for Islamic financial institutions to innovate and develop products with Sharia uniqueness. In most countries, regulation for Islamic financial sector are similar to that for the conventional ones. Therefore, we are lucky today to have 4 experts from different parts of the world to discuss the issue and share their thoughts with us about the issues through this webinar. The objective of the webinars are to explore the issues related to Islamic finance regulatory development across the world, to identify opportunities and impediments in developing Islamic finance regulation, particularly in response to COVID-19 pandemic, to propose ideas, innovation, and solution to develop Islamic finance regulatory environment. Without further ado, let us start our panel discussion with our first panelist, Dr. Jamshaid Anwar Chattha, a good friend of mine. We were together at the International Islamic University Malaysia, IIUM, during our postgraduate study. I still remember clearly the time we spent together, Dr. Jamshaid, at the OSR lab. I believe Dr. Ronald also remember, we always had a good sleep there, right, Jamshaid and Ronald? Because there is AC there.
Yes.
Dr. Chattha is actually an ex-regulator, standard setter, and qualified chartered Islamic finance professional with more than 14 years of direct experience in regulatory issues of the Islamic finance. He was an assistant secretary general and project manager at Islamic Financial Services Board, IFSB, chief banking researchers and chief financial analyst in the Central Bank of Kuwait, CBK. He has also been program leader and senior Islamic finance expert for Toronto Center in Canada. His presentation will discuss about developing international prudential standards to ensure the robustness and stability of Islamic financial industry. Please welcome Dr. Jamshaid Anwar Chattha.
Thank you very much, Dr. Sultan. Can you hear me? Can everybody hear me?
Yes, it's clear.
Yes.
Okay, perfect. Bismillahir Rahmanir Rahim. It's a great pleasure and an honor to be part of the good company of professionals and good friends at this platform. And let me take this opportunity to thanks to the organizer, the Indonesian Association of Islamic Economists, the Indonesian National Committee of Islamic Economic and Finance, the Indonesian Deposit Insurance Corporation, and of course all the good friends. I'm very impressed by the presentation made by Dr. Halim. It's a very great presentation to look at provide the international perspective. And of course, we continue to learn from his wisdom. And also want to thank to Mr. Rahardjo, and I think he's also listening to this forum, and my friends, the fellow panelists, and also the distinguished, participant. As the title says, it's about the Islamic finance regulatory developments, the impediments and opportunities. Of course, we have, we know all there are a lot of challenges the COVID-19 brings, but also in my conviction, it brings a lot of opportunities to the supervisors, in particular, being from ex-regulator. It's an opportunity for supervisor and regulator to review their existing prudential framework, in terms of, robustness. And I think this is a very good test now for us compared to GFC, which was primarily very different. And this one basically is a very different crisis, and I think it's going to test a lot of, element from the prudential side. So what I'll do is basically, in my context, because I've been given the three major issues to talk about today, which was basically developing international prudential standards to ensure the robustness and stability of Islamic finance industry. And I have been given three topics to talk about in my slot, and I will, in my brief presentation, I'll try to cover all these 3 points to satisfy the term of reference Dr. Sultan has given to me, and I'll try to comply to that in this regard, presenting my views and experience and at a global level, and how these three issues could be tackled from a macro perspective. And before we do that, I think it's very important to recall what Dr. Halim just mentioned. I will not spend too much time on that, but I think this is very important to understand that this COVID-19 pandemic scenario, it brings a range of implications basically to us in terms of not only economic, social and economic, but also financial, and because it has really made the economies suffer across the globe. It has threatened the financial stability. It has made recovery very daunting task. And that's the reason why the governments are coming up with the huge packages. So we are basically fighting in this context a kind of invisible threat, and this is a very reflection point. I call it for Islamic finance as well, because it's not exception, because it's continued to operate in the whole same financial and economic environment where we are seeing, as you have also highlighted, Dr. Sultan, the negative GDP outlook. This is very clear from the IMF. We are dealing with the low yield issues. We are dealing with the deeper recession. We have a record debt now. We are dealing with the QE again. We are seeing the enormous pressure to the government and regulators in terms of fiscal deficit and consolidation. And governments are going for emergency rescue packages from the parliament. And I think that's where we see that there's a lot of things that are happening in the financial industry. As a result, the Islamic finance is not an exception, and it's going to be definitely affected. The only question is that what is the proportionality of the effectiveness, and I think that will depend to what extent the country have the exposure to the Islamic finance. From a regulatory point of view, Basel III has deferred implementation. We have seen that IMF has come up with the recommendation in 2020 in May in terms of what supervisors should do in terms of COVID-19. AAOIFI has published 2 documents and a lot of guidance to the very detailed guidance to the institution, to supervisors. Same as the IFSB has published a very brief report, for the supervisors, and IFM has published a report recently. Right now, we are discussing basically that what kind of debate right now we have is it going to be L-shaped recovery? Is it going to be V-shaped? Is it going to be U-shaped? So all basically that depends on the financial preparedness and also the impact to the economy in which we are operating. And of course, like for example, is taking all together in the stress testing, both the V-shape, the U-shape, and also the W-shape, double-dip recession in the stress testing, just to ensure, because we don't know what exactly is going to be the form of recovery. Now let me talk about the first issue, which is the implementation of the IFSB standards. Now, before you understand the implementation of the IFSB standards, it's very important for us to understand, that the Islamic finance now, it's more than 2.4 trillion now, as per the recent IFSB report, stability report. And we see that these red dots basically shows the market share, compared to basically the overall market, the banking market share in the country. And if you look at it, basically, and Indonesia is still below the 10% market share, around 6% according to the recent report. However, if you look at the two countries, Sudan and Iran, which are 100%, pure 100%, but when you look at the volume of the transaction, even though the Sudan has a 100% Islamic banking share, but Indonesia has just 6% market share. So the volume of in terms of US dollar is bigger than the Sudan, which has 100% market share. So that's not basically the point. The point is that to what extent this volume basically and the financial institution, which are Islamic finance, Islamic banking institution, are operating in the country, and they need the regulatory treatment. And if you look at basically on the left-hand side of the chart, you can see that these are 6 or 7 countries basically, which are basically represent the high concentration. They basically represent 80 to 85% of the total Islamic banking market share in the whole Islamic finance jurisdiction. Now, this one basically provides us, a kind of perspective that the importance of having in place the regulation and prudential standards in order to ensure the robustness of the Islamic bank. And the question that why do we need a different regulatory regime for Islamic bank? And I think this is very partially, very apparent from the balance sheet point of view, as also Dr. Halim pointed out in his presentation, there are specificities of Islamic banking and finance which call for a different treatment. I think that's where the stylized balance sheet of an Islamic bank also calls for a different regulatory treatment in order to take into account the specificities of Islamic bank balance sheet, not only from a governance point of view, but also the risk management point of view, the risk mitigation point of view, the Sharia compliance point of view, and also the formulation of reserve, including the BER, IRR, and also the different nature of the contract. There are two things that we need to bear in mind. It's not about just the prudential standards, because prudential standards come under the regulation where the OJK, for example, is mandated. Not in every country is dedicated agency for regulation. It's except in Islamic finance jurisdiction where the Turkey has this model and Indonesia has this model. The rest of the Islamic finance jurisdiction where Islamic finance operates, they continue to operate the dual banking, where the central banks actually takes the supervision and also the regulatory part role. Most of the time we focus on the the regulatory side, but I think also there's importance in order to build a robust regulatory system. We also need to put emphasis also the supervision part, basically, including the supervision tools, the robustness of the on-site and off-site activities, and also the the coordination between different agencies, including different tools. So far, the IFSB, since its inception, has issued 32 standard and guiding principles, which include basically 21 standards for the banking segment, the 3 standards for the capital market, Islamic capital market, and SCFR for 6 standards basically. And when we look at the implementation basically, so we see that according to the IFSB recent survey, it shows a kind of progress, but actually also shows a low rate of adoption. If you look at the sample size, for example, the latest survey available, it has taken only into account 20 RSAs, 20 supervisors, but actually the last year the survey was, it responded about 41 supervisors. So for that account, I've not take that much, in terms of the result because of the low representation, but you can see that there's a progress in terms of planning, the implementing the desire of the supervisor to implement the IFSB standards, though Islamic banking continued to remain dominant. And we have seen that due to the COVID-19, there's a lot of emphasis on the GRC, which is the governance, risk, and compliance, which covers the corporate governance standard and the stress testing standards, highlighted by the supervisors. In terms of challenges and opportunities, this is an area where we see that, for regulators, we see a lot of opportunities and issues. And the degree of these regulatory challenges basically varies from one jurisdiction to another jurisdiction because of number of factors, basically, because some of them are very advanced, some of them are developing, some of them have developed the public and market infrastructure. But there are major four issues that I try to cover. Basically, first one is enabling legal framework, which brings basically the legal certainty, predictability, and also covers the contract law, insolvency law, trust laws, and also the tax neutrality, basically. And then also the strong prudential regulatory framework, which covers basically, the prudential standard in line with the IFSB standards and also with the AAOIFI standards, and in particular the prudential standards, I'm talking about the core minimum. And the core minimum basically holds the risk management, corporate governance, the transparency, the Sharia compliance, stress testing, the capital adequacy, and these are to ensure the level playing field in the jurisdiction. And then also the active financial market infrastructure, which is basically the lack of active money market and also the secondary market for scoop, Sharia compliant instrument in terms of building the deep liquid, secondary market for the scoop trading, and also as pointed out by Dr. Halim as well, the financial safety net, including the Sharia compliant deposit insurance and also the Sharia compliant lender of last resort facility. And then lastly, the challenge that I see basically from supervisor is the capacity of the supervisory capacity. That means basically the knowledgeable staff which can supervise, which can also be helpful in formulating the policies and regulation, but at the same time, it's also competent enough to supervise the institution in a more, robust way. Not only these challenges, we are also confronted now with the emerging challenges. Not everything to be mentioned here, but few of them worth highlighting here. Number one is basically the guidance on the transitioning from Basel 1 to 2 and 3, because a lot of jurisdictions are still at the Basel 2 and then the Basel 3, and then now the Basel 3 has been basically deferred. And then we are seeing a more challenge to the industry in terms of integration of Islamic social finance to mainstream Islamic banking, which includes all the social instruments, and also the digitalization, which is basically the fintech, and also the increasing cybersecurity risk, increasing the operational risk, and then lastly, the Maqasid Sharia versus the profit perspective. That means basically now we are seeing more. The people want to see more authenticity to be maintained, more credibility, not only the profit center basically perspective from the institution. And in my view, there are best practices. Of course, there are key 7 elements, and also which we call them priorities for supervisor in order to have a very robust regulatory regime for Islamic finance. And number one is basically the formal structure. You can't supervise or regulate Islamic finance if you don't have a formal structure, in your central bank or supervisory agency. You should have a formal unit with the mandate and adequate internal capacity. You should be able to address the precondition, for example, financial safety nets, the insolvency regime, financial infrastructure. You should have accounting principle, including the IOFI one, and pre-prudential standards, supervisory approach and technique, payment and clearing system, and also the HQLA, scoop and market infrastructure. So these are 7 priorities which give an indication on the seriousness of the country, a regulator, in implementing the Islamic bank. As Dr. Halim pointed out, this is one of the policy paper basically which I wrote for the Toronto Center. Of course, people can download the paper and read it, but actually it talk about the COVID-19 implication and also what does it mean for Islamic banking basically. And of course, this includes the policy recommendation, not only, in terms of clarity in the regulatory intervention from the supervisor, but also level playing field and how to navigate between the high capital requirement and also the economic growth dilemma, and managing the Islamic bank asset quality, which is basically in the light of moratoria, moratorium given by different, government and the central banks, and also the liquidity current and how the sovereign scope and for fiscal deficit, which provide this, a lot of, boost to the government. And the good thing about these, there's a silver lining here. The recently in 2018, the IMF has basically adopted the IFSB curve principle, which are basically CPI and FAR, which will actually, in the future, strengthen the regulatory environment globally when they are taken into account, when the central bank and supervisor will be assessed. And I have a very privilege, to be part of this working group, when we were developing this core principle. And it's very good to see, and I think this will be a kind of game changer for Islamic finance in the future, when the FSAP reports will be available, or the self-assessment report will be available for the peer reviews, in order to understand the regulatory gaps and how to cover them. And my last point basically is initiatives taken to ensure these development of supportive regulatory environment and prudential standard implementation for Islamic finance. I have a view that it's not just a one person job, or it's not a one institution job. Basically, if we want to see a very supportive regulatory environment globally, and we want to see prudential standard implementation for Islamic finance, not only for one standard setting body, but overall standard setting bodies for Islamic finance, I think we need to look at the four dimensions. Number one is institutional level, tone at the top. Now, let's not put everything on the supervisor. Let's also talk about institutional level. Islamic banks, for example, they should be going for the best practices. They should be volunteer to go for the best practices, voluntarily adopting those standards. It is the board responsibility, the board of directors, to be active and lead the implementation. And also, since the CBAFI, which is basically the Council for Islamic Banks, I think they should help the Islamic banks in order to how standards could be implemented in their respective domains. The second level is the supervisory regulatory level. I think for supervisor, if you're a central bank or supervisory agency, I think you should address regulatory impediments and also the preconditions in terms of the one I just mentioned a while ago. And you should basically conduct a self-assessment, self-assessment, which is basically a kind of self-assessment under the IFSB CPFIR, basically, which will give you a kind of perspective that where the regulatory gaps are and how you can build the the regulatory system which is robust in your country. And you should be able to have a very clear strategic roadmap in the form of medium-term action plan, that how and when you are going to implement the standards. And you should have a coordination with other stakeholders, including the Ministry of Finance and also the other government agencies. And also number three basically is the standard setting bodies. The standard setting bodies like IFSB, IOP, IIFM, these are the major Islamic finance bodies, actually the only bodies. They should put more focus on the policy advice and technical assistance. Now, what I mean is basically, because at the end of the day, if you want to see the implementation of standards, for the supervisor need to be guided on the policy advice, and they should be given a kind of technical assistance. Conducting a lot of workshop actually does not have the implementation, but it just increases the awareness and also the increase the knowledge. There's a lot of things to be done on the advice side and assistance side. So these standard setting bodies, in my view, should have a very clear implementation dashboard similar to the Basel Committee. They should clearly have, if you have a 10 standards, which country are basically implemented, where they were last year, where they are now, so that the people can see the progress on the dashboard. And also implementing and executing the ICAP, as advocated by the IFSB, similar to the RCAP, basically. And also synergy and avoiding duplication. So there should be a complementary role for implementation. And I think this is where all three standard setting bodies need to work together, probably issue a white paper kind of thing, where the standard implementation for prudential, the guideline, the prerequisite, the key consideration for the accounting standard, key consideration for the auditing standard, key consideration for the, so from the scope perspective as well. Lastly, at the international level, I will put the IMF, World Bank, and the IDB, because the IMF and World Bank has been doing the kind of FSAP already, and I think they are the right institution to help the supervisor to implement the Islamic finance regulatory regime and gaps. And also IDB, I think IDB can provide a lot of technical assistance, in terms of engaging the external experts for the supervisor to provide them policy advice and technical assistance for capacity building of supervisor implementing Islamic finance. In nutshell, if you put these four pillars together, you're going to have a very good supportive regulatory environment. and also the prudential standard implementation rate will be very high. And of course, this is a continuous process. This should continue to be evolved in the future. Thank you very much.
Thank you, Dr. Jamshaid Anwar. Thank you very much. It was very insightful explanation and comprehensive content. Dr. Jamshaid, you are live from Pakistan, right? From Islamabad, yeah?
Yes, yes.
Some important notes from your presentation are the COVID-19 outbreak brings a range of implications for all types of financial institution. Islamic finance, Islamic banking is no exception. Being part of the global financial system, business model of Islamic finance requires a different regulatory regime for Islamic banks, focusing on specificities. ISB has published 32 standards, but the latest survey results show progress on the implementation of prudential standards is a bit low rate, so we need to improve it. Key challenges in building a sound and robust regulatory framework for Islamic finance include an enabling legal framework, strong prudential and regulatory framework, active financial market infrastructure and supervisory capacity, guidance on transitioning from Basel I to 2 and 3 and its equivalent IFSB, integration of Islamic social finance to mainstream Islamic finance, digitalization, and upholding Maqasid Sharia. There are 7 best practices for the development of a robust regulatory regime for Islamic finance. Obviously, adoption of IFSB CPI FR by the IMF and FSB is a game changer for Islamic finance. And there are 40 initiatives to foster the development of sportive regulatory environment and prudential standards implementation for Islamic finance. They include initiatives at institutional level, supervisory and regulatory level, standard setting bodies for Islamic finance level, and international level. In particular, supervisory should address regulatory impediments and necessary preconditions by undertaking self-assessment under IFSB CPIFR and have in place a strategic roadmap in terms of medium-term action plan. Now we turn to our second panelist, Mr. Syed Faiq Najeeb. He is a senior Islamic finance specialist at the Islamic Development Bank in Saudi Arabia. Mr. Najeeb's professional career in the financial services industry spans over 10 years with a rich and diverse set of working experience. During his career, he has worked for renowned international institutions such as ISDB, and in the past with the International Monetary Fund, IMF. Similar to Dr. Jamshaid and Ronald, he used to work for Islamic Financial Services Board, IFSB, and also for Kuwait Finance House, KFH. His presentation will focus on regulatory issues in optimizing Islamic finance contribution to achieve development in response to COVID-19 pandemic. Mr. Najeeb, the floor is yours.
Bismillah, walhamdulillah, wassalatu wassalamu ala rasulillah, amma ba'd. Assalamu alaikum, and a very good afternoon or good morning, depending on where you are. Thank you very much to the organizers for inviting me to deliver this presentation. And although the topic is on regulatory developments, what I've decided to focus on basically in my presentation today is more from the development perspective, the economics and financial development perspective. Because, you know, looking at the roster of the panelists, I'm sure the other speakers are more experienced than me on regulatory issues, and they will be able to cover those regulatory matters. So I decided to focus mainly on the development side in my presentation today. Now, this has been spoken a lot today, even during the opening remarks and the keynote speech by His Excellency. We are witnessing something which is a crisis of the real sector. You know, traditionally, we have been talking about financial crisis. Every 5 years, 10 years, there's a financial crisis in some part of the world. But the difference right now is that it's not simply a financial crisis, it's an economic crisis, and this hits the real sector directly. So one of the differences you can try to understand is that whenever a financial crisis takes place, normally we try to blame someone. We blame the regulators, maybe that regulators have a very relaxed regulatory regime. They allow people to do whatever they want. You might blame some bankers. You might say the bankers were acting imprudently. They were doing financing to whoever asked for it. But the crisis we have right now is something which originated from a disease. So basically, at the start, we were thinking about a health crisis. It's a disease. We've had flu before, also in the past, bird flu, or H1N1. It started off as a disease, indeed, but it's no longer just an issue about health or about lack of hospitals or medical facilities, because what we have seen as a response was very unprecedented. Initiation of lockdowns, complete shutdown of the travel industry, the tourism industry, flights, hotels, restaurants, social distancing, people working from home. The impact is actually on the real economy. And while there are different estimates coming from different agencies, so I have a table which I've sourced from the Economist Intelligence Unit, the contraction is actually feared to be much worse than the global financial crisis. Now, if it's the crisis of the real sector, what does it actually mean for us? And when I say us, it means all of us, whether you're from any sector, you're from any different country, or you are in any different industry. This crisis is going to impact us in three different measures. First of all, of course, there is a health risk. Now we are asked to wear masks, we are asked to do social distancing. I don't know about how it is in Indonesia, but at least at our parts of the world, there has been prolonged lockdowns. People have been working from home. And some of my colleagues who are seeing me on camera right now, they're saying you have gained a lot of weight. Yes, I have gained a lot of weight because the past 4 or 5 months I've been working from home. And there have been times I have been under 24 hours curfew. You cannot even leave your house to go anywhere else. So it hits us in three ways. There is a health issue, whether you are free from the disease or not. It's not just about coronavirus anymore. It's a lot of other things. There are some statistics coming from some countries that there are divorce rates increasing, people having problems in living in the house. There are mental, psychological issues coming. Of course, with that comes also the financial and economic part. The point I'm trying to create with all of this is that, unfortunately, from a development perspective, it does create an impediment for us when we talk about sustainable development goals. Alhamdulillah, the world was progressing very well. We were targeting the 2030 Sustainable Development Goals achievement. But now with this lockdown, with the layoffs, and with people losing their jobs, the incomes going down, the prices increasing, there are issues, especially in developing countries, about poverty. People are going hungry again. We are still not sure yet, but there are estimates that there will be more than 1 million people going back into poverty. So all the progress we have achieved, all of a sudden we have come to a halt, a stop in that. There are issues about literacy. Schools are closed. I don't know again how is it in Indonesia, but in different parts of the world, the schools are closed. There are no examinations being done, and you are having online classes. Now, whoever of you who are family people here, whoever have kids, I don't know about you, but if you ask me, my kid is not learning anything from online. I have a very small son. He's a very young boy. He only knows TV and computer as cartoons. If you think he's going to listen to somebody trying to teach him nursery rhymes, that's not going to happen. So, I'm still not sure whether they're going to start physical classes from the new year or not. And this is from the development perspective, but let's talk about disruption. Every year, by the way, this is interesting. Every year, every 2 years, we talk about a new normal. Nowadays, it has become common. Since 2009, we're talking about a new normal. But this time, the new normal is completely abnormal. And I'll tell you why. I'll give you my experience of my institution at least. Believe it or not, from the past 5 months, I've been working from home. I'm expected to start physical office on Sunday. Actually, we have working day starting from Sunday. Actually, the next week I will be in office. But from the past 5 months, we are working from home. What have we realized in this new normal? Especially regulatory institutions or development banks, a lot of traveling was involved, a lot of meetings were involved, a lot of paperwork was involved. From the past 5 months, we have not taken a single flight. We have not used a single piece of paper. We have not used our car to go to the office. We have been working from home. So this disruption, this new normal is something which is expected to change the way we do things. And the reason I'm mentioning this is because I'm saying that there are some positives. Some positive, not all, and not everybody is lucky, but there are some positives. Now, what about some positives? This type of situation is forcing us to rethink what is our strategic priority? How do we approach, development or the financial sector? How do we approach priorities in our life and everything? So, for example, there was in the internet there was some memes you can say or some messages going around that in this crisis what people have now started prioritizing is only the essentials of life, only the basic needs of life. And subhanallah, when we are focusing on basic needs of life, the global economy is going down, unemployment is increasing, all types of things are happening. It is an opportunity. By the way, it is an opportunity even from an SDGs perspective, not from the poverty, literacy, hunger, but from other things. Now, I gave you an example. From the past 5 months, we have not used a single piece of paper. We have done all our approvals, financing, transactions online. So we have saved a huge amounts of paper, which is part of the SDGs climate change initiatives. We have not driven our cars to the office. We have not used fossil fuels. We have not undertaken a single flight. I'm not talking about the income part. Yes, poverty is affected, people have lost jobs. But there are some positives from the environment perspective. All the flights grounded, immediately everybody could, there were news reports everywhere that the pollution has gone down, environment has increased, many other things have happened. The point I'm trying to make is this is an opportunity for us to rethink development at all levels, at a family level, at your own household, at a policymakers level, whether you are a regulatory authority or a ministry, or at the higher government level, that where are we now and how do we learn from these lessons to go forward. Now, the topic of us today, of course, is from an Islamic finance perspective, and that's why I'm now going to start focusing on Islamic finance. Within the financial sector, as all of you know, and Dr. Jamshaid also covered in his presentation, that people have, not people, the policymakers or the regulatory authorities, they have responded with, of course, relief packages and initiatives. So you have relief, you have even cash transfers. My siblings are in the US and they were so happy that, the president of the US sent them a check. They got extra money. There have been cash transfers. There have been loosening monetary policies. Everywhere the rates are going down, governments are stepping in to provide some support to the SMEs. And of course, from the financial sector itself, many regulators have asked banks to provide moratoriums, up to 6 months in some cases, where you actually don't repay anything. And when you don't repay anything, for some countries, they've even said you don't have to pay any profit or interest or any additional consideration. Now, all this background I have said to you about the economic crisis, how it impacts us, what does it mean for the Islamic finance industry? Now, let me please be a bit controversial here, and I'm just throwing ideas. It's more of a question. What does all this mean for Islamic finance? And since March onwards, since February, March onwards, when it was declared a pandemic, I've seen a lot of conferences, a lot of webinars, a lot of seminars. In fact, everybody who is doing something on Islamic finance and COVID-19. And everybody's talking about the future, rightly, which makes sense. But please, if you allow me to be a bit controversial, unfortunately, I really don't think currently it means much for Islamic finance. Not much currently. Let me explain what I'm trying to say. You know, when the financial crisis happened, and then in 2010, 2011, everybody started talking about this is a financial sector crisis. Islamic finance with its risk-sharing principles is more resilient. You know, we will be able to do things better if there is was risk-sharing and everything. 10 years later, we are again with the crisis. Nothing much has changed. Maybe I'm wrong. Maybe there are institutions which are practicing risk-sharing. But I actually would like to, ask anybody. Indonesia has a lot of good researchers, a lot of good academic people. This is your chance to research. This is a real sector crisis. Can you do some research and tell us, were the Islamic financial institutions resilient? Did risk sharing help? Are people better off? Or basically we missed the opportunity again because we are not doing risk sharing. Because we're not doing risk sharing, there is no difference. Whatever it impacts a conventional bank, it's the same impact on Islamic banks. This is more of a question and a challenge to the scholars and the students and the researchers in Indonesia that this is the time to research. This is a real sector crisis. All sectors are affected. And you cannot blame bankers, you cannot blame regulators, you cannot blame anybody that these guys were not doing the right thing. This is a shock through a disease. And
Yes,
if you are, yes, Dr. Sultan.
About the time, if you don't mind.
Yeah, sure, of course. So the points I'm trying to make here is that in terms of the current status, it's more of a future opportunity because the products being offered, there are still legacy issues from the past 10 years, which we said in the financial crisis, they are still applicable as of today. Now, one point I want to make here is that the relief measures we talked about in terms of granting more time to the debtors, granting more, time to pay back the loans, while they were Sharia compliant, it's not the Islamic banks who are able to initiate it themselves. It's not because, in Islam, we say when a debtor is not able to repay for genuine reason, you give him more time, but it's not the natural response from Islamic banks. And partly the reason is because they're operating in conventionally aligned frameworks, regulatory and legal frameworks. What is the extent of the damage? It's still too early to say. We might have clearer results in the next year onwards. The final point I want to make is what do I suggest are the 4 principles to basically support development of the real sector through Islamic finance. And I'll be a bit quick because of the time issue as Dr. Sultan has advised. First of all, the vision needs to be big. When I started Islamic banking, Islamic finance 10 years ago, and as Dr. Sultan mentioned, I worked in an Islamic bank, the focus was always home finance, car finance, personal finance. We did not start thinking about more strategic sectors, which is the bigger picture, being able to be involved in large infrastructure projects or large-scale development projects such as ports or airports or infrastructure. Somehow the vision needs to become bigger and it needs to be supported by the scale. What do I mean by being SME of the financial sector? Believe it or not, every now and then we go to any country, we are still concerned that Islamic banks, they're small in size, they don't have scale, they need support from the government, they need support from regulators. Why are we still there? We have been, at least in some of the countries in the Gulf, Islamic banks are there from 40 years. Indonesia, it's more than 20 years. I think the formalization of Islamic banking was in 97, 98. Principles, this is where I believe some good work has been done in Indonesia, and previously I have partnered with Bank Indonesia to do some work on social finance. We need to do 2 things. The products have to be true to label. Wherever we are saying Islamic banking, you need to achieve differentiation. And somehow you need to integrate social finance, which is basically sadaqah, oqab, zakat. The debt relief measures, whatever was mentioned in the past, if social finance was integrated in Islamic banking, it would have naturally happened. Zakah can be paid to relieve an eligible debtor. It would have been natural. And the last point I want to talk about is basically compliance. This is not simply regulatory compliance, by the way. This is an integrated, holistic compliance across all value chains. Let me give you an example, then I'll just finish my presentation. That when you talk about an Islamic economy, you talk about all sectors, halal, fashion, pharmaceutical, medicine, and so on. The problem is, are we checking whether all these sectors also have Sharia compliant financing? The answer is no. There are some halal products in the market which the manufacturer is actually manufacturing with interest-based loans. You understand what I'm trying to say in terms of the end-to-end, the whole compliance across all value chains. Not that the Islamic finance is just for house, for car, but if a factory is producing halal products, it should be by right funded by Sharia compliant financing as well, whether through sukuk, whether through banking. It should be protected through Islamic insurance. So finally, in the last, what I want to say is what the IDB has been doing. We are a development bank. We have committed up to $2.3 billion of COVID-19 financing. And as of the last statistics, almost 1.86 billion has already been committed to 29 member countries. We received altogether 43 requests from different countries. Specifically for Islamic finance, we have approved over $14 million worth of technical assistance to different member countries, including to Indonesia. This is the soft component where we develop the skills, capacity, regulatory, and legal framework, and so on. And this amount excludes the equities, all our equity investments. It's just the soft component. And finally, we have also been founding members of all Islamic finance infrastructure institutions such as IFSB, IOFI, SEBAFI, IIFM, IRA, ICRA in Dubai, Bahrain. And we have contributed financially and also in kind through our technical expertise, which have supported the development of more than 125 standards. So all the IFSB standards, we are part of the working groups, we're part of the technical committees, and same for the IOP. So I apologize for taking a bit more than my allocated time, but I hope, inshallah, the presentation has given some thoughts. And if there are any questions, I'll be happy to answer. Thank you so much. Wassalamu alaikum wa rahmatullah.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Mr. Syed Faiq Najeeb. It was very insightful explanation and deep content. Few key highlights of your presentation are COVID-19 is a real sector crisis, different and more severe from the financial crisis of 2008-2009, and is likely to place impediments towards the achieving 2030 UN SDGs. COVID-19 has not affected Islamic finance currently any differently than the conventional financial industry due to unresolved legacy issues such as the use of debt-based contracts, lack of differentiation in products, Islamic banks running on conventional aligned regulatory and legal frameworks, and the impact is likely to be clearer in 2021 when financial results are reported by banks. 4 key recommendations to achieve post-COVID-19 development through Islamic finance is for the Islamic financial industry to focus on a bigger vision covering strategic sectors beyond retail segments, developing larger economies of scale for Islamic financial institutions, implementing principles through to label and integrating social finance such as zakah, sadaqah, awqaf within mainstream Islamic finance, and achieving end-to-end compliance through Islamic finance across all Islamic economy value chains. Thank you very much, Mr. Syed Faiq. Let us move now to our third panelist, Mr. Omar Mustafa Ansari. I consider him as my big brother. We spend and share our memorable time together in our beloved Kingdom of Bahrain, Bahrainuna, Ashad Mamlakatul Bahrain. By the way, he is also very skillful football player. Mr. Ansari is the Secretary General of the Accounting and Auditing Organization for Islamic Financial Institution, AAOIFI, a global Islamic finance standard setter. Previously, he was partner, assurance, and head of Islamic finance for Pakistan and Afghanistan at Ernst & Young Fort Road, Sidat Haider, a member firm of Ernst & Young. He is also a fellow member of the Institute of Chartered Accountants of Pakistan. Today, he will discuss about the adoption of international accounting and auditing standards to accelerate global collaboration among Islamic financial institutions. Please welcome Mr. Omar Mustafa Ansari.
Assalamu alaikum wa rahmatullahi wa barakatuhu. Rabbi shrah li sadri ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Thank you, Brother Sultan. You are always like a brother, and thanks for the nice introduction. These days, I'm not playing football and building up weight. Like as Brother Faiq also said, that because of this COVID, everything has changed. So everything has changed, and all these things are impacting us. Today, inshallah, I'll be discussing mostly on the accounting standards aspect, but a little bit I'll touch upon what changes are being to our general perception about accounting and financial reporting. The time I can understand is quite limited. The topic is very vast, so I'll try to be very brief, and maybe on this topic we can have separate special sessions going forward, inshallah, in collaboration with KNEKS. We will try, inshallah, to visit physically as soon as things are better, as we planned that, inshallah, we'll be having a formal visit of Indonesia with KNEKS, but still, this opportunity of being with all of you is a great opportunity. Thanks to the whole management, and particularly Brother Sultan, for inviting us. Right now, one of the main topics that is related to regulatory aspects is the accounting and financial reporting. It's not only for Islamic finance. Actually, all regulators are actually genuinely concerned about the accounting and financial reporting. Obviously, it's a general concern all the time, but in COVID, this impact has this issue has significantly increased because of so many reasons. But let's first touch upon a little bit, just a little bit, what are the objectives of accounting and financial reporting for an entity? The world in 16th century, 17th century, 18th century was seeing a scientific revolution as well as economic revolution. There were entities being formed which were bigger as compared to the historical business entities ever. The larger corporations started to exist. And that was the time when it was understood that at times the owners are not involved actively in the business. So they need to be aware about the financial aspects and the operational aspects of the entity. So this whole concept of accounting and financial reporting came in. With the advancement of the business world, this need increased day by day. And every new aspect is increasing it. As Brother Faiq was very rightly saying that this COVID is changing in a manner that a lot of our work environment has changed, a lot of paperwork has gone, a lot of things have changed. So this has not happened only in the Islamic Development Bank. It is happening all over the world. So the same effect that we are talking about, the need for the stakeholders, the need for the owners, other stakeholders about the financial information is evolving. It is changing. It is increasing day by day because the type of investors, the type of stakeholders are also increasing day by day. The type of institutions are changing. New instruments are coming. New transactions are coming. New type of businesses and business models are coming. And all these things need at least a good level of reporting to the stakeholders in a manner that they are able to understand and comprehend what the entity is all about. This is about an entity, but when you talk about the whole economic system, whole country, let me tell you, if this accounting and auditing profession was not in place, and although a lot of people have a lot of arguments against these auditors to be like they are money-making machines and they are not fair and they are not doing justice to their job, but still, if this thing was not there, there will be no capital market as we can see now. There would be no financial markets as we can see now. How you can, if you are sitting in a financial institution, how you can finance to a company while you don't even have any idea about how it is doing its finances and how it is making money or not, and to what extent it is able to pay you back the money. Same applies to an investor. So we need to understand that a good and robust accounting system and a whole mechanism of accounting and auditing and financial reporting is very much important for any economic system to exist. If you want to take that economic system forward from the Middle Ages, You need to have a very good and robust system for accounting and financial reporting. And obviously the auditing part is the rechecking part, which is very much relevant to that. Why I am talking about these basics again, because the things have changed and the things are continuously changing. Now, one of the most important aspects is that what we call the comparability. The point is that I, as an accountant, personally may have 10 different accounting theories or 10 different possibilities of accounting policies and accounting approaches in my mind. And I may be right with the logical thinking that I'm developing to support that one. But if everybody starts doing this thing in its own framework, in its own area, in its own country, in its own company, this will not serve the broader purpose. It will not serve the greater objective of a situation where we can have reasonable knowledge in terms of financial matters with regard to all the entities that are of public interest and are operating in the respective economic system. This is important because we want to extend the financing. This is important because we want to attract the investments. So this is becoming more and more important for the regulators and the governments, not even the regulators. I would say regulators are concerned about the financial reporting and accounting matter for their needs. But additionally, this is the government's need to consider that they need to have a good system. And that is the reason that you can see that even the multilateral bodies have been supporting it, the governments have been supporting it to go towards a global set of financial reporting standards. And generally speaking, for all the sectors, it is the international financial reporting standards. However, when we come to Islamic finance, we have two major issues. And that is actually, I would say that this is, although now AAOIFI, alhamdulillah, is working in 5 different areas: accounting, auditing, governance, Sharia, and ethics. And this is a there we have a different level of adoption. Like accounting is still the highest level of adoption with around 26 regulators around the globe, followed by Sharia and governance. Roughly, there are 35 regulators around the globe who at least follow some of our standards, either fully or partially or as guidelines, or have developed their own framework based on that. Shortly, we will be publishing a footprint analysis report for AAOIFI, inshallah. It's towards completion, so shortly it will be published and you will be able to see that. So coming back to the point of origination of AAOIFI, when AAOIFI was originated, the idea was that Islamic finance is different. If Islamic finance was not different, it was not needed. And Islamic finance is different. That is why it is needed, and that is why it is actually having its own niche, which is in a lot of countries becoming a main market segment rather than just a niche. However, we need to understand that Islam provides guidance in all the areas, and at the same time, we have to be neutral. It's not about that I want everything to be done in my way. I want to have my dress. This is, I believe, this dress is the only dress that is the Islamic dress. No, Islam has provided principles for dressing. Any dress that falls within those principles of dressing is acceptable. Same applies here, that we have Islamic finance, we have general accounting principles. A lot of general accounting principles apply to Islamic finance. However, we have certain very specific aspects. The first aspect, which is very important, is that in some areas, Sharia has its very clear prohibitions or clear rules. Like for example, you cannot discount a receivable as per Sharia. So if you start discounting receivables in accounting, it might not be in line with the Sharia principles. And not only this, in an interest-free economic system, where ideally the discount rate becomes 0, there might not be any discounting on any receivable. Similarly, we need to understand that there are very specific characteristics and risk profiles of Islamic finance transactions. So you need to work on those risk profiles and characterization of those transactions to reflect them in the best possible manner for the benefit of the stakeholders. And that is what AAOIFI is doing in its accounting standards. So our accounting standards now are supplementing the international financial reporting standards in a manner that we do not compromise on any of the Sharia principle, and we do not compromise on any of the characterization of the transaction and on the right reflection of the risk profile of the transaction. Coming back to the COVID side, how COVID has impacted these things and how we see it. The first thing, as we see that globalization is increasing with this COVID impact. So we believe that it is high time that more and more countries and regulators need to consider that they should be adopting the same set of financial standards rather than they go for different sets. For example, till now, Pakistan, Indonesia have been developing their own Islamic accounting standards. While they both countries, and similarly Lebanon did some regulations, although they were all based on AAOIFI, but some other countries did some other effort as well. Even in 80s, Malaysia also did it in 80s and 90s, although they have taken a reverse route now. So the nutshell, number one, with this increased globalization, there is more and more need to align the work. You cannot just sit in in isolation and say, okay, we are doing the best thing. Okay, maybe I can personally believe, I know a lot of your experts who have been genuine experts in this, and I can believe your standards are excellent. But at the same time, you need to align them to the global, and it might be a good idea that if we can align them together with AAOIFI, countries like Indonesia and Pakistan need to work with AAOIFI to come with a single set of standards. And Alhamdulillah, as I mentioned, it is already adopted by a lot of regulators. It applies to other ones as well who are going for IFRS. They need to understand what genuine differences are. They need to understand that part. And AAOIFI has done significant research in this area and has published some of the documents as well. Brother Sultan, are you going to remind me about time?
I'm sorry.
No. I know I'm on the later end of the discussion, so I have to be very careful. So just let me sum it up in 1 minute or 2 minutes. So thank you very much. So coming to the COVID part, one thing I would say that we feel proud of, that when these issues came, AAOIFI started its work on guiding the industry. We have published statements from our accounting board and from our governance and ethics board on the COVID. And while on the governance side, our main emphasis was on the ethical and good governance behavior in these times, in line with Maqasid Sharia, so that the Islamic finance can demonstrate that it is different from the conventional finance. But on the accounting side, our work was much more complicated, like a lot of regulators and the international accounting standard bodies have gone through those problems. You can see those statements, these are available on AAOIFI's website. One thing we feel proud of, not only on working on that, but we believe that our set of standards is robust and good enough. Because of these challenging times and the so many challenging issues that came up in these times, we had to review our standards and see whether our standards are able to respond to that. And Alhamdulillah, we did not need to amend any standard. We just provide clarifications and guidance to the global industry through our statements. And this was one of the good examples that the true nature of Islamic finance transactions is reflected in our standards. And hence, we are in a much better position to reflect the right accounting treatment even in these difficult times. Thank you, Brother Sultan. Thank you, everybody, for listening me patiently. I'm available for any questions and answers. I believe that the time is very short for this very vast topic, but I can understand that in the benefit of time, I need to close here. For sure, I'm available for further discussions, and I believe that it might be a good idea that on this particular aspect of accounting, and particularly with the Indonesian Sharia Accounting Standards Board and KNEKS, we can hold some specific session to discuss this one. Thank you again for inviting me, and thank you very much for listening to me patiently. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikumussalam wa rahmatullahi wa barakatuh. Thank you very much, Mr. Omar, Mustafa, Ansari. It was very comprehensive and enjoyable presentation. Some important points are accounting and financial reporting has become a general concern to the world, especially with the advancement of the economic activities, the needs of financial information by various stakeholders are changing from time to time. That's why we need to always come out with robust accounting and auditing systems. Comparability is very important. If everyone uses his or her own accounting framework, comparability becomes an issue for many stakeholders. Harmonization in terms of standards across countries where Islamic finance is in operation is highly encouraged or needed. Unlike other standards, the AAOIFI standards, accounting, Sharia, auditing, and others have captured the uniqueness of Islamic financial instruments and contracts. Thank you very much, Mr. Omar. Last but not least, we would like to turn to our fourth panelist. This panelist is very special to me personally. Why? Because I have known him for about 34 years. He is my childhood friend who share the same interests and educational background. Among the first person that I play football with. And he is my best friend, Dr. Ronald Rulindo. He is the chairperson, Islamic Deposit Insurance Technical Committee, Indonesia Deposit Insurance Corporation, LPS. He was seconded by LPS to KNEKS last year for about 1 year as one of the directors at the executive management of the committee. He is also an external expert at the International Monetary Fund, IMF, and like Jamshaid and Syed, he used to work for IFSB as well. At this webinar, he's going to share his thoughts and knowledge about Islamic financial safety net framework. Without further ado, I invite Dr. Ronald Rulindo to deliver his presentation.
Thank you, Dr. Amir. Assalamualaikum warahmatullahi wabarakatuh, and good afternoon to all of you. First of all, I would like to say thank you so much for the IAEI, KNEKS, and IDIC to organize this event so that we can share our thought, especially on the strengthening Islam. As we have already heard previously from Dr. Jamshaid, he covered very comprehensively from the prudential regulation perspective, and Brother Faiq from the development perspective, and Mr. Omar from the accounting perspective. That's why I try to select another angle, which is very important.
I'm not sure whether my network is in problem or Ronald's network. Ya, boleh. Ronald, it seems you have connection problem because I couldn't hear you clearly. Dr. Ronald?
Hello?
Yeah, now it's clear. Yeah.
Can you hear me? Yeah,
Yes,
sorry.
yes.
It must be an operational risk. Yeah. Okay, Ayas, can you move the slide to slide number 3? Yes, I will focus my presentation on this slide. Actually, you already seen this presentation as well in Dr. Halim Alamsyah presentations. That financial safety net arrangement in many countries at least consists of these 3 important pillars. First is financial services regulation and supervision, in which in Indonesia we know we have Otoritas Jasa Keuangan or JK, and then lender of the last resort, which offered by the central bank. In case of Indonesia, we have Bank Indonesia, and the last but not least safety net is deposit insurance, in which in Indonesia offered by the IDIC or LPS. But if we refer back to the picture showed by Dr. Jamshaid in the early presentations, he showed us the significant presence of Islamic banking in various countries. We saw that Indonesia is not among the top countries that have a big market share, but for I think if I am not mistaken, there are 7 countries with a market share more than 10% in the pictures, but only 2 countries, which are Malaysia and Turkey, that have a deposit insurance. But if we discuss, if you go for further detail on the bank resolution, especially for the resolution approach for the Islamic bank, even Turkey doesn't have a established mechanism for Islamic deposit deposit insurance as well as resolution approach for Islamic banks yet. But why is this topic important? Why deposit insurance and bank resolution are important? Because in the case of bank failure, people will lose their confidence to the bank. They're afraid that they will lose the money, so that they withdraw the money from the bank, so it will trigger rust or bank run. We experienced that in Indonesia back in 1998, when one of the most healthy banks, I mean, the bank is still here right now and very strong, like Bank Central Asia or the BCA, was rushed by the customer at the time because they're afraid that the BCA will also be liquidated at that point of time. That's why deposit insurance played an important role to enhance the confidence of the market. Even during the recession, this COVID period, well, when most of the speaker already highlight that that many countries experience a decrease in gross domestic product or GDP. They go into the recessions. The issues that there will be a bank's collapse. This is why deposit insurance has a very, very important role, because people no need to worry, because no need to worry, even if the bank fails, there's a LPRs or deposit insurance that we repay back their deposits. But deposit insurance is one thing. Bank resolution is another thing. That's only advanced financial industry countries that have the existence of this bank resolution framework. For example, in USA, Europe, and in Asia, it's like Japan and Korea and Malaysia. Luckily, Indonesia also have a IDIC or LPS that offer that's become the bank resolution authority. Why bank resolution is important? Because if there is a banks fail, let's assume that the banks fail on Friday, but with the effective bank resolutions approach, on Monday the customer of that bank can continue enjoying the banking service. It's just the ownership of the bank, as maybe the name of the banks that have changed. This is what we call as one of the option of bank resolution, which the failure of a bank will not affect the life or the service that is given to the customer. Now let's go back to the slide shared by the let we go back to the slide shared by the Jamshaid before. What will happen in a country where 50% of or 100% of the banking industry are Islamic banks, and they don't have deposit insurance in place, and they don't have bank resolution in place? I mean, for the country like Sudan or Iran, maybe they have no problem. But for the country that implement the dual banking system, to be honest, the failure of Islamic bank, and if we cannot manage the failure of the bank in the very effective way, it will ruin the image or the reputations, not only to the Islamic banking industry itself, but also maybe the image of the Islam as the way of life, because they say, oh, see, Islamic banks can fail. It already based on Sharia, but is it what we call as Sharia? They violated our right, and so on and so forth. That's why issues in Islamic deposit insurance, having established Islamic deposit insurance and resolution framework for Islamic bank is important. Next slide. Luckily, in IAEI, International Association of Deposit Insurance, together with Islamic Financial Services Board, come out with an exposure draft or core principle for Islamic deposit insurance system. By the way, Mr. Faiq was the project manager for this core principles before, and we are almost in the process of finalizations. This core principle provide a guidance for deposit insurance all over the world that have Islamic in banking industry in the jurisdictions to provide Islamic deposit insurance system. I mean, I will not explain in detail about this because Brother Dr. Sultan Emir will remind me about the times. But the main point here is Islamic deposit insurance can be run by separating the source of funds from the conventional and Islamic banks and manage the funds in Sharia compliant way. And when there is a Islamic bank become a failure, we can finance the failure or can pay back the deposits of the deposit of Islamic bank's client based on the Sharia compliant funds as well. So with the presence of Islamic deposit insurance, we will ensure that the Islamic banking service are Sharia compliant start from the beginning when the Islamic banks was established until the Islamic bank was what so-called died. Next slide. And another important thing with this core principle is it's provide a guidance or next slide. It provide a guidance on Sharia governance. No, this is something that are not things by the conventional deposit insurance because ensuring Sharia governance in the deposit insurance is very matters actually. And we go to the next topic, another important topic, framework for resolution for Islamic banks. I believe that some of you are not aware what are resolutions actually. Well, maybe we take a simple approach. A resolution is finding a solution for a bank that become a problem bank or or a failed bank. In the past, if there is a failed bank, LPS or maybe in the 1998 Bank Indonesia, they just liquidate the banks or they inject money to the bank, what we are used to call as an open bank assistance. Maybe in Indonesia, you're familiar with the case of Bank Senturi. That Bank Senturi receive a capital or through the open banks assistance. But in the advanced economy, they have another options, purchase and assumptions, bridge bank, and one more is bail-in. Indonesia also have bail-in, but it's not under the authority of LPS, but it's under the authority of the OJK. In the purchase and assumption and bridge bank, when the banks fail, LPS will separate a good asset and a bad asset. The good asset will be transferred to the assuming bank, which is the existing banks that willing to accept the good asset. But in return, LPS will transfer. So first, LPS will separate the good asset and bad asset. But then LPS will give the insured deposit to the assuming banks. But in return, LPS will pay with a good asset. If there's no balance between number of insured liability moves to the assuming bank with a good asset, LPS will top up and pay cash so that the assuming bank will receive the fair amounts as compensate to the liability that they receive. Now that's a PNA. Second is a bridge bank. It's similar actually, PNA and a bridge bank. The difference is in the bridge bank, the bank is established by LPS itself. It could be because there are no time or not enough time to selling the asset to the assuming banks. So with PNA and a bridge bank, it can smooth the process of bank resolutions, so that people or the customer will not feel, I mean, something happened with the deposit at the banks. But now we have to the questions how to conduct the bank resolution in Sharia compliance way. This is what have been explained by Pak Halim in the beginning, that we are in the process of establishing a method or rules of resolution for Islamic banks in collaboration with the Dewan Syariah Nasional or National Fatwa Council, in which our DSN, Dewan Syariah Nasional, has issued 2 fatwa related to LPS. First is a fatwa on Islamic deposit insurance, and the second fatwa is about the resolution for Islamic banks. And LPS also already issued LPS regulations related to Islamic deposit insurance and resolution for Islamic banks. Then we go to the case study of Indonesia a little bit. Next slide. Just go next slide.
Make it a bit brief, Dr. Ronald, because
Yes,
of the time.
Sure. Next slide. Okay, maybe let me explain. In the next slide, you will see that 99.9% of deposit in Islamic banks in Indonesia is guaranteed by the LPS or IDIC. So you no need to worry about your deposits in the Islamic banks or even in the conventional banks. Even maybe not all of you are aware that actually LPS already liquidated 10 banks, most likely, of course, the Islamic rural banks. And we also already liquidate one Islamic banking windows, which is Bank IFI back in 2008. But you see that this liquidation has no impact to the Islamic banking industry in Indonesia in general. Next slide. So how we offer the Islamic Deposit Insurance Program and then bank resolution. This is the framework actually. We start the Islamic Deposit Insurance Program, start from the payment of the membership contribution by the Islamic banks. We separate the premium that we receive from the full-fledged Islamic bank, Islamic banking units or Islamic banking windows, as well as Islamic rural bank from the conventional premium that we get from the conventional bank. Then we also invest it separately, and we make sure that the managing of this fund is full or in line with the Sharia rule and principle. And this is the first three we do when the bank is in a good conditions. But when the bank have a problem, in a financial difficulty, we will prepare the bank resolution. We will undertake the bank resolution preparation, but I will explain it a little bit in the next slide. But if in case the bank is failed and we have to liquidate the banks, IDIC, LPS will do and will undertake reconciliation and verification to separate which deposit that is insured, which deposit that are uninsured. Actually, there are very big debate here about the position of mudarabah, because mudarabah actually is an investment, not a deposit. But should we guarantee this? Now, maybe if we have another time, we can explain a little bit about this. But up to this point, DSN and OJK, also LPS, agree that at this point of time, we treat the mudarabah as deposits. So LPS will guarantee this the mudarabah deposit in the Islamic banks. Next slide. So this is my last slide. Basically, when we talk about the previous slide. Now, this is the bank resolution. When we talk about bank resolution, it's not a simple process. Next slide. Sorry, you go too far. Next slide. Yes, this one. When we do bank resolutions, we start this process even in the normal conditions. So we develop an early warning system. We assess the risk of the bank so that when we know the bank become a problem bank, we prepare everything. We even if the bank fall under intensive supervision according to the OJK, we will undertake a due diligence, and we do many analysis to prepare ourselves if the condition of the bank is getting worse. But when the banks of supervisors fall under the bank under special surveillance, we updating our due diligence, and we conduct what so-called as least cost test to determine which resolution options that are appropriate for the bank to maintain. I mean to ensure that the failure of this bank will not affect the stability of the banking industry. And at the end of the day, of course, we will execute the bank resolution process, and we have to ensure that the resolution process happens smoothly, so that if it will not trigger any unnecessary panic in the market, and we can maintain the stability of Islamic banking industry and the banking industry in general. So I think I will stop my presentation up to this point. But this is something that have to be implemented as well by the Islamic banking industry in other countries. I mean, outside that, Indonesia and Malaysia that already have established Islamic deposit insurance and Islamic bank resolution framework for Islamic bank. Even during this COVID, it's become very important, and we have to do something about it. Thank you, Dr. Emir.
Thank you very much, Dr. Ronald Rulindo, for your excellent and insightful presentation. Few key highlights of your presentation are many OIC countries that have Islamic banking still do not have deposit insurance schemes, Sharia compliant especially. Thus, they will not be effective in dealing with bank failures if they occur during this pandemic. In building Islamic deposit insurance scheme, OIC countries can refer to the IAEI exposure draft on core principles for effective Islamic deposit insurance. The approach for a resolution for Islamic banks is still under development. Indonesia and Malaysia are the earliest countries to develop this resolution, and hopefully it can be imitated by other countries. So thank you very much again, Dr. Ronald, for your presentation. So now we have listened to presentation of all the panelists, which I think have strengthened our understanding about the issue. And now we move to our next agenda, which is question and answer session from the participants. However, due to the limitation of time, I have selected 3 questions only from the chat room. So the first one is from Mr. Arinto. He is an associate lecturer at the Muamalat Institute, Indonesia. The question maybe is addressed to Dr. Jamshaid and also Dr. Ronald. Why is it so hard for Islamic banks, specifically in Indonesia and other countries, to implement Sharia restricted investment account? Dr. Jamshaid, please.
See, we need to understand the fundamentals of this issue, basically, the restricted investment accounts. In order to have restricted investment accounts, you're basically asking a kind of a ring fence portfolio managed by the Islamic bank. And that means that you have a very good investment managers at the Islamic banks. Just I'll give you an example of mutual funds, Islamic mutual fund. The mutual funds, you have a certified managers who are basically the investment managers, right? And they know about the portfolio, they know about the investment, they know about the exit strategy, they know about the, where to invest, basically how to maximize the value. So there is a lack of capacity and also fit and proper criteria given by the regulators to the Islamic banks, especially for managing the restricted investment account holders. Because right now, Islamic bank, if you go talk about conventional bank, they are not allowed to do that. They have to have a separate subsidiary. But in Islamic bank, because it's a universal bank, they can do investment, they can do real estate, they can do commercial banking, they can do universal banking, everything. So the problem is, one, lack of guideline from the supervisor in terms of minimum qualification for the people who manage the restricted investment account, number one. Number two, also the capabilities of the portfolio within the the institution, and also the people people trust to the Islamic banks in terms of restricted investment accounts. Whether if they put there tomorrow, they're going to lose their value. If you have a NAV today 100 and then tomorrow turn out 70, so that's a pure risk sharing kind of thing. I think that's the point Faiq was mentioning, and actually he was challenging to research also. So because right now it's a very good dilemma now that these accounts holder which are ring fenced, because you're not going to include them in your capital adequacy and your regulatory treatment, etc., except your governance, which will be required by the supervisor. And I think that's the point where we see a lot of deficiency on the ring fencing of this restricted investment account.
Thank you, Dr. Jamshaid. Would you like to add some points, Dr. Rulindo?
Yes, actually, it's already mentioned by the Faiq previously. It's the challenge of the mindset. I mean, in many countries, I think, but Dr. Faiq and Dr. Jamshaid and Dr. Omar can, add information about this. Most likely, Islamic bank is a retail banks. They do not do investment banking, which is the Sharia restricted intermediary account or investment account that we used to call in the Middle East and in Malaysia. Basically, it's kind of act of the investment like a mutual fund, like Dr. Jamshaid said. But looking the practice of Islamic banks in Indonesia, I mean, we already almost 30 years of having Islamic banks in this country, but the market share is stuck at less than 6%. So I think it's better for Indonesia to explore the disease investment accounts products, because by having investment accounts, I think we can increase the market share of Islamic banks directly, where we call it what's it called, the parent banks, the parent conventional banks can put the money to an investment account in Islamic bank as a placement to the third party, especially after the OJK implement the synergy OJK rules on the synergy,
Parents and subsidiaries,
synergy, yes,
partnership.
yeah, between conventional and Islamic banks. So I mean, having investment account will smooth the implementation of this POJK, by the way, and we can use the investment account as well to attract investors from the abroad. Yes, Dr. Jamshaid.
I think the problem I see is that because if you look at you raise a very good point. I think people need to understand the Indonesian market share has not been kicking off last many years, many years, almost now 10 years now, right? We are stuck with less than 10%, maybe 15 years now, right? I think probably for you, National Committee on Islamic Banking Finance, I think probably you should take this challenge to investigate and undertake a larger studies at Indonesian level, because you got OGK, you got a Bank Indonesia, you got the deposit insurance, you got all the necessary infrastructure there, but still the market share is not kicking off, right? I think probably this study should help the regulators and also set the direction to the market. Right? What exactly are the impediments for the people? Why they are not actually opening an account? Why the penetration is not there? For example, Pakistan now is already 15% started very late with you. Oman is more than 15 now already, you know, very late, very recently. So there has to be some kind of probably study, you know, and maybe identify some factors that basically become impediment for the investment account holders. You know, maybe they need a different business model. Maybe they need, for example, Malaysia, they just remove them investment account holders. You know, you have to pure investment account holder, and then you go to the other side. So probably, I think some challenge for you as well further.
Yeah, but just want to add, maybe in the case of Indonesia, because there are many people who are still transacting with Islamic microfinance. When we count Islamic microfinance, at least under BPRS or Islamic Rural Banks and plus capital market, the market share is becoming more than 9%. This is maybe, but still, your points are very valid, and this becoming an issue for us. Thank you, Dr. Jamshaid and Dr. Ronald. I would like to move to the next question, which is from Reza Aditya. He is working for one of the Islamic banks in Indonesia, BNI Syariah. And this question is to all panelists. How should Islamic financial institution help micro, small, and medium enterprises, as MSMEs, to survive during this pandemic? Maybe we can, I can ask Mr. Syed, Faiq, Najeeb to answer.
Thank you very much, Dr. Sultan. Actually, if you allow me, I'll also want to mention one point which was related to the previous question, but I think it's important to share.
Yeah.
You know, in 2018, Bank Indonesia very kindly arranged a visit for me to one of your cooperatives. Okay. And it was, I'm forgetting the name, I'm really sorry, but the headquarters was
Baitul Mal wa Tamwil.
Yes, that's right. So the BMT, I went to their headquarters in Surabaya, and I was very surprised to know that that BMT had equity investments in 32 types of businesses.
Yes.
Ranging from fried chicken shop to, I don't know, I was like, for me, it was eye-opening. I have never seen something like that. And they were doing equity. My point of view, if we're talking about the Indonesian perspective, I will not answer strictly about the restricted investment account, but for me, there were two things which opened my eye. First of all, this is a BMT which is actually doing equity investments, and there are people money from cooperatives. So where is the difference coming that an Islamic bank is not able to do it, but the BMT, is there trust or amana? People trust the BMT more than the bank? I leave that to the Indonesian policymakers. Now, the second point I wanted to make was somehow, you know, I know KNKS is doing a lot of initiatives, but there is a lot of policies, a lot of different ministries who are all doing Islamic finance in a different way, because it's not easy. You have commercial banks. Within commercial banks, you have three types of bukus, right? You have sizes, buku 1, buku 2, 3. Then you have some cooperatives who are under a ministry, but then there are some other type of microfinance which is under OJK. For Indonesia, this is not universally applicable. For Indonesia, I am not convinced by the argument that Islamic banks cannot help MSMEs or Islamic banks cannot do investment accounts, because why the village or the small banks are able to do it? You know, you understand my point. The big banks, which are more well regulated, more well audited, more in the public spotlight, have all sorts of constraints. But those who are under ministries or those who are under microfinance or rural banks, they are able to do whatever they want. This is where the answer comes from KNKS or Bank Indonesia or OJK or LPS. Where is the problem? Are we failing the regulatory or the enabling environment to enable that? I will not use this answer in another country, by the way, only for Indonesia, because I have seen it. 32 businesses as an equity, and it's a big size. The size is larger than some of the commercial banks. So to answer the question which was asked, what can the Islamic banks do for supporting MSMEs? Please look at the success stories within Indonesia and see how are they able to be successful.
Thank you very much for your very straightforward points and very enlightening answers. And maybe, if you don't mind, Brother Omar, you would like to add some points about this question? Brother Omar? Hello? Okay, if it is the case, then we can move to the last question, which is from Alfani Zahra Ritonga. Actually, she is a student in State Islamic University of North Sumatra. Her question is, what kind of Islamic economic policies can be done to improve the economy of Muslim countries after this COVID-19 pandemic? Brother Umar, are you there? If you can answer this question. If not, maybe Brother Umar. If not, maybe I can ask any one of the panelists to answer this question, Dr. Jamshaid or Brother Syed Faiq.
You see, the problem is, I think we need to understand this issue of resolving this kind of crisis and containing crisis is going to be different from one country to another country. And this is absolutely clear because Indonesia has to go to the parliament to get the ceiling uplifted because the deficit to GDP is growing. So the same is happening to other countries, right? So they have to look at their resource envelope, whatever resource envelope is there. If it's not enough, they have to go and make amendments, emergency mechanism, right? So this is purely at a country level. It's going to be, and of course there are different tools each country has, and the international institution, Faiq rightly pointed out, is the IDB is helping to the OIC Muslim countries because it has the mandate for the OIC countries. Unless the IMF World Bank, which has a mandate, and they have also the limits on which the financing can be accessed by the different countries, right? I think this should be very clear. But Dr. Sultan, give me some few seconds. I want to take a challenge that Faiq actually give the challenge to every one of us. And I want to respond to that basically, because I think very important, because I've been regulator, so I want to answer that question basically. I think he's right. I was discussing the same point with the IMF just 1 month ago. We were having a discussion on this. And the question was that, and I told them, look, this is a test for also Islamic banks and also supervisors, to what extent they pass on the losses to the investment account holders as a result of the crisis, and because we don't know the crisis yet, because the moratorium is still in place. Moratorium deadline has not finished yet. So we're going to see end of this year, or maybe the Q4 result of this year. We shall see the result, in terms of losses and how the losses are transformed. I think if you are a regulator, I can tell you frankly speaking, we had a discussion in many times this thing. This is regulator would not like in this abnormal situation to allow the passing of the losses to the general public, because the problem will be there will be a panic in the market. There will be a bank run that can create, even conventional bank can create, or Islamic bank can ripple effect to the conventional even as well. So from different point of view, in normal circumstances, I would agree to fine, but in a very abnormal circumstances, we are facing unprecedented time. I think no regulator supervisor would wish that the investment account holder should bear the loss Instead, those losses should be borne by the equity of the shareholders, and if not, then the government should come in and bail out some of the financing under the moratorium. For example, some countries, government giving 70% guarantee to the SMEs and also the small businesses, genuine business losses, right? But I think that is something I would like to clarify to that, and I think he has a genuine point to look at for the researcher to look at the impact, but I think they will be only able to see the impact once the Q4 results are able, which will be Q1 of the 2021.
Thank you, Dr. Jamshaid. The last additional point from any panelist.
Yes.
Yeah.
Actually, Dr. Jamshaid gave a very interesting points, but I mean there is another question actually from my colleague Alpha Yuanita in the chat. What Islamic banks can offer to solve this potential crisis issues, but let we go back to what Paus Benedictus XVI, if I'm not mistaken, say in 2008. He said that we should learn from the Islamic economy. I mean, after the global financial crisis, he said that we should learn from the Islamic economy. Why he said so? One of the reason is because of the risk sharing itself, because of the riba, because of the interest. I mean, yeah, Dr. Jamshaid point very good, reasonable. We will not the investment account experience loss. Why? Because we still apply the riba mindset, the interest that the depositors or the investors should get a return. But if we apply the profit sharings, I mean, even in the normal situations, even in this COVID, this recession happens, both of the depositors and then those who get a financing, I mean, they will be in the equilibrium maybe. But of course, there must be an intervention so that there's no much loss will be transferred to the investor. But at least we will be in a better situation as compared to right now, I think.
Thank you, Dr. Ronald. It is a very interesting discussion. Unfortunately, we are already late a bit, 15 minutes. I would like to apologize for that. So I think now it's a time for us to end this event since our time is very limited. So I'm sure we had very interesting discussion today, inshallah, where all the experts have given their experience, opinions, and thoughts. And I do hope all of you can get some information, knowledge, updates on Islamic finance regulatory developments. I also would like to greet some prominent participants. I saw here on my Zoom my ex-ambassador in Bahrain, His Excellency Mr. Chilman Arisman. Assalamualaikum, Pak Chilman.
Waalaikumsalam. I wish I could say something actually, but okay, time is up.
I'm sorry, Mr. Chilman. Inshallah, next time, His Excellency, Your Excellency, inshallah.
Thank you, thank you.
Thank you, thank you very much. So, in order to get Allah's blessings, let us close this event by reciting Hamdalah. Alhamdulillah Rabbil Alamin. On behalf of the organizer, National Committee for Islamic Economy and Finance, KNEKS, the Republic of Indonesia, Indonesia Deposit Insurance Corporation, LPS, and the Indonesian Association of Islamic Economists, IAEI, I would like to thank the speakers and participants of this webinar for your presence and contribution today. See you, inshallah, in our next series, which will be held on 26th of August 2020, with the theme of ensuring economic stability and resiliency in response to pandemic shock, policy choices from Islamic economic perspective. Thank you very much to all of you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Pak. Thank you to all panelists.
Yeah, don't forget to fulfill the survey, and I would like again to apologize for any question that cannot be accommodated due to limitation of time. Please fill up the survey so we can improve the conduct of seminar or webinar next time.
Okay, Dr. Sultan, thank you very much. I'll be signing
Thank you
off
very
now.
much, Dr. Jamshaid, brother
Dr. Ronald,
Syed,
Okay.
Faiq,
Dr. Ronald, everyone
Thank
in
you,
Indonesia,
Dr.
brother
Jamshaid.
Omar,
stay safe,
Dr.
stay
So nice
Ronald.
to
blessed.
meet you here. I think you're getting
God bless
chubby, you know.
Indonesia.
Thank you, Ronald.
Thank you.
Pak Anas, Assalamualaikum.
So izin live ya.
Ya.
Inle Pak Emir, thank
Okay,
you.
see you everyone.
Pak Firman,
Bye.
makasih banyak Pak.
Thank
Thank you, Your Excellency.
Thank you, Faiq.
Thank you.
Pak Anas, apa kabar? Pak Anas Bafen?
Baik, baik Pak. Pak Emir, sehat-sehat.
Alhamdulillah.
Iya, ya, selamat
Terima kasih,
Pak. Selamat
Terima
Pak.
kasih Pak.
Ya. Oke. Oke, Pak. See you Pak Amir.
Pak. Ya, Assalamualaikum.
Waalaikumsalam. Assalamualaikum.